We've had you on a few times recently, Paul, and every time we have you on, I don't know if we're asking for you to ring a bell, but we're certainly saying tech's moved a long way. Do you have 1 foot? You have a toe out the door? Maybe your little toe, not Sergeant Hulk, a big toe at this point.
Well, I think after yesterday, the fundamentals as we get through the quarterly earnings season have been pretty strong. I wouldn't buy too much tech, at least this week, because we have some more quarterly earnings to come. And unless you know spot on what they're going to report and what they're going to guide to, it's always risky to do that. But the biggest factor is not fundamentals. The biggest factor is what you said with what Janet Yellen said yesterday and the inference that rates are going to rise. Tech stocks are the ultimate long-duration asset, most sensitive to movements up in interest rates. And so I own, a lot of the names that are, well-known, particularly the FAANGs. I try to pick my slots. I'm not too aggressive yet, but after a day like yesterday, then, I start to round up the list, and I'm going to get more aggressive, probably next week after we get the last quarterly earnings reports to clear this week.
I mean, the reports that we saw are a long way from crypto or anything even close, or NFTs or any of that. But do you think it's all related at this point to cheap money? Or is tech deserve this, and this is what's to be expected with reopening when they've done so well when things were closed, and they might do even better as we reopen and not give back any of the gains? So is it different fundamentally?
Yeah. I do think that you'll continue to have the move into cyclicals, the reopen trade. Growth in tech had beaten value so badly for so long. Going back to the 09, 010 timeframe with the coming out of the financial crisis. But I do think, Joe, that fundamentals are strong in tech, and I do think that the genie is out of the bottle, and we had a real pickup in pace from the world going analog to digital. Of course, that was already happening, but now it's happening at hyperspeed. So I think fundamentally, things have proven to be better for technology. Technology stronger. Just want to get through the near-term information flow.
What was with it was just the semiconductors turn yesterday to consolidate? Do you think that's all that was? Yeah, I do, because within the tech sector, semiconductors are my favorites, about 50% of what I do, which is way overweight in semiconductors. We have voracious demand for the chips. We'll have even more so, Joe, as we go forward with the rollout of 5G, AI, cloud computing. And of course, we all know in the meantime, we have a pretty serious chip supply shortage. Now, that'll work through probably in the next couple of quarters, according to the major semiconductor capital equipment vendors. And you have a nice setup. Now, the stocks aren't particularly inexpensive, but some of them should go much higher. A company like Micron, for example, it earned $3 a share last year. It could easily earn $10 to $15 a share, 5x in 2 or 3 years. And so there's still a lot of upside in a few semiconductor names. The law of large numbers, we've talked about it for a while, but a lot of the big names are just in terms of valuation. Some of them start with a T. Some of them start with 2 T's. If you decide to buy those stocks, are you assuming it's going to be 3T, 3.5 trillion eventually? I mean, is to get the kind of 5
I think over.
That's going. So that's feasible. Maybe with these dollars.
Yeah, I think it's feasible for a couple of them, but among the FAANGs, I'm clearly the most bullish, both based on what's been reported recently on digital ads, and first and foremost Google, followed by Facebook. The other trillion-dollar market caps, I'm not so bullish on. Microsoft and Apple. I think Amazon is okay, but I think of the majors, we've really seen resilience and even acceleration in the growth of digital ads, and Google and Facebook, I think, can go much higher. Not so sure about the other ones.
I don't know. The ads someone has to make the things or provide the services for the ads, though, too. So there must be some other undervalued areas, aren't there? Old economy type stuff, or it can't all be about just targeted ads. There just seems to be a lot.
Yeah, that's right.
At this point, Paul, it just seems like
with all the indications we're getting, that we're, I guess that's just the froth that you can expect when not only is the Fed on full bore with everything, but then you've got these trillion-dollar stimulus bills just coming fast and furious, one after another. Right after we finish one, we're on to the next.
Yeah, well, I think Google and Facebook among the majors should be, still ample price appreciation potential. But you're absolutely right, Joe. Go back to my favorite group, Semiconductors. There are some names that are not necessarily mega caps that have upside. There's a company reporting tonight, Kulicke and Sofa, that nobody cares about, KLIC, and I think that is one that's a smaller cap, undiscovered, great upside opportunity.
Shepard Smith here. Thanks for watching CNBC on YouTube.